Hello traders, the title of the video is how to day trade, tips and tricks, part 3. This third part of this series of video is also independent from the second part and the first part. You do not have to watch the first part and the second part before watching this part. So they are quite independent videos. And let's get started. This video is recorded by Georges Beaulieu, the founder of dayprotrader.com and the founder of stochasticmarket.com and founder of 24elliotwaves.com. In this video, we're going to use the short-term equilibrium price level and also the closing price on the yearly charts to determine a valid day trading setup. I will be sharing with you new day trading tips and tricks that you can put into use, but first test it, retest it on a demo account before using it. Okay, let's get started. For all trade, we must use the 5% money management rules and apply stop loss in all trade. This video is for educational purposes only. It is primarily for the TSTW 24 traders. When we're going to day trade, all right, as I said to you many times, but I need to repeat this because it's very important. If you want to day trade like professional traders, we must always have two watch lists, one bullish watch list and one bearish watch list. If the market is bullish, we will implement our bullish watch list. If the market is bearish, we will implement our bearish watch list. Sometimes the market can be bullish, but the sector can be, the market can be bullish, but the sector can be bearish. If the market is bullish, but the sector itself is bearish, we can get away with it by implementing both bullish and bearish strategy. Because the sector itself is bearish, we can attempt to sell some stock that are in that sector. But because the market is bullish, we want to align our strategy with the market. But we can get away with it, so to speak, by selling stock that are in a bearish sector, though the market itself is bullish. All right. The first financial, we're going to look at the 6 stocks, 1, 2, 3, 4, 5, 6 stocks listed on the Dow 30s, American stocks. And we're going to discuss day trading, all right? And we'll show you on this chart what's happening today on the 2nd of January 2013. The first stock is Johnson & Johnson, Epic J&J, Juliet, November Juliet, a very bullish stock because this company pay a lot of dividend. So long-term investors are busy buying this stock and hold it, all right, for, dividend purpose, dividend earning purposes, all right? So for today, I'm going to go to the yearly chart first, and we're going to look at the closing price as I did in the first part of the video. But I'm going to bring on now another key level, which we call the short-term equilibrium price level. The short-term equilibrium price level is a proprietary trading tool for myself, which I have created, and is the short-term fair value for the stock. That level, the short-term equilibrium price level, is valid maximum 2 weeks, for 2 weeks, all right? So we will be watching the short-term equilibrium price level from today up to the end of the second weeks, all right? So the red horizontal line is highlighting the closing price on the yearly chart of Johnson & Johnson. So because the market did open near the closing price today, we'll give priority to bullish signal above the red horizontal line and priority to bearish signal below the red horizontal line. The orange line here at $92.94, you need to know that level down is the short-term equilibrium price level for Johnson & Johnson. This level will remain in place for 2 weeks. So today is the 2nd of January 2014, plus 13 days or plus 10 days, it will stay in place. We will still watch this short-term equilibrium price level at $92.94. The rules are very simple. If the price is below the short-term equilibrium price level, priority to bearish signals. If the price is above the short-term equilibrium price level, priority to bullish signals. That's it. But you can see that the price below the closing price on the yearly chart, but also below the short-term equilibrium price level. Now, we will give priority to sell signal below the closing price on the yearly chart, which is the red horizontal line. But if it goes above the red horizontal line, we can be bullish up to the orange lines only. But as the price approaching the orange line, we should be ready to take some profit, because some trader will try to sell it as the price trying to retest the short-term equilibrium price level, because the price now below the short-term equilibrium price level. If it's coming back near it, some trader will try to sell it again to force it back down. All right. If we go now to the 3-minute chart, we want to watch the red line and the orange line on the 3-minute chart. Hopefully, we'll see them all on the 3-minute chart. If we can't see them on the 3-minute chart, we can see the closing price. You can see here, as I said to you, priority to sell signal. See, there was a top here, and as the market did open today on the 2nd of January 2014, right here, the price, you see, it went down fast. Okay, it went down and quickly ran to retest the closing price on the yearly chart, which is the red horizontal line. You can see that it touched it here, but it sold it and it closed down here, followed by the bearish candle. Traders now looking for opportunity to sell it, and they are selling right now because the price is below, okay, the closing price on the yearly chart, and also above, it's also below the short-term equilibrium price level. Okay, that's it. You can see now the orange one. You can see on the yearly chart, that's the short-term equilibrium price level. The price now quite below. My apology for this. The price now below the short-term equilibrium price level in a declining channel. All right. Okay, so you see now. All right, it's in a declining channel. So trader will look. You see on the 31st. Touch it here, and today it came near the edge of the declining channel, and they are selling it. So it's in a declining channel. But if it goes back above the closing price on the yearly chart, the level of $91.71, and it finds support, which means it's out of the bearish channel, and finds support above the closing price on the yearly chart. If you are buying it, it's going up, watch the short-term equilibrium price level at 92.94, because if the price below the short-term equilibrium price level, okay, we should give priority to bearish signal, provided that the price is still in a bearish channel. But it's pointless to start selling it if it's out of the bearish channel as it's going. If it goes above the declining channel, it's not good to sell in a bullish zone. All right. This is the short-term equilibrium price level and also the closing price on the yearly chart. We are using these two key levels to determine excellent day trading setups. The next financial that we're going to discuss, we're going to look at 6 financial instruments. The second one is Procter and Gamble. Okay, we're going to go back again on the yearly charts, and I will show you the red line again is the closing price on the yearly chart. As you can see, that's the closing price for the year 2013. The price did close below the closing price of 2013. Priority to bearish signal below the closing price, and priority to bullish signal above. But you can see the orange line is above the red line, which is the short-term equilibrium price level for Procter and Gamble, Epic PG, Papa Golf. Okay, right here. Okay, the short-term equilibrium price level, you must note it down, is at $83.22. This level will remain in place for 2 weeks. So we are watching it. In theory, priority to bearish signal below the short-term equilibrium price level, and priority to bullish signal above, because the short-term equilibrium price level is the short-term fair value for these Procter and Gambles. So we cannot ignore the short-term equilibrium price level for any financial instrument. If we go back again, we go to the short-term frame. 3-minute chart. I'm going to use the 3-minute chart again. You can see the red lines, which is the closing price on the yearly chart, but we couldn't see the orange line, which is somewhere up here. Again today, on the 2nd of January 2014, the price was up before. You can see my Polish portrait. So the price was in a declining channel. If I draw a declining channel, hopefully like this, on this 3-minute chart, the price was in a declining channel. So today, as the market did open, it forced it out below. So the price went below the short-term equilibrium. It went below the declining channel. And now you can see here, this is a very beautiful signal here to look for opportunity to sell on the edge of the declining channel. In fact, the price displayed a double top below the bearish trend line. It's a beautiful place to sell and to place a stop loss above this trend line here. Okay, and it's going down. Price going down. One must check now where are the nearest support level. We can go to the hourly chart and draw. Okay, you see here the support and resistance level, because the price going down. So the price now, you can see, it's a kind of head and shoulder here. If it did below the neckline, so a professional will set their target below somewhere here, expecting the price to come all the way here. It does not have to. If the bearish momentum continues, the target is in the zone of $75, provided that the bearish momentum continues and the price remain in the declining channel on this 3-minute, on this hourly chart. So right now it's out of this bullish channel. We are working with the market patterns. These are market stable data. We can see here we are now in a declining channel. If I draw my line roughly, okay, just pay attention carefully to what I'm doing here. We are now in a declining channel on the hourly chart. You see here. And traders were selling on the edge, forcing the price below the, the closing price on the yearly chart. This is a setup. The setup, we have noticed the setup on the yearly chart, price near the closing price of last year. And we want to buy above, we want to sell below. But note also that the short-term equilibrium price level at $83.22, the price is also below it. So because it's below it of short-term fair value, we must give priority to bearish signal, but we will not sell anyhow. So if it's push it back to the edge, we'll look for opportunity to sell. But so far, as the price start going down here, it did not display a new lower low. Look on your left-hand side, there was a low, another low here, and the price did not display a new lower low compared to the previous low. So you need to watch it carefully. And also this is a support level. So if you want to sell now at a support level, we will allow the price to dip below the support level and to come back and retest the support level. And if we find a resistance here, which means price continue to move to the downside, going below the neckline, and then pulling back to the edge of the trend line here. And if you receive a sell signal here, okay, we'll go to the lower time frame and look for the low risk entry point. If the signal fell, we'll come out. We are just trading the price in a channel all the time. If you want to sell, we want to sell in a declining channel. If you want to buy, we want to buy in a rising channel. Very simple. All right, but here we are using two key levels, the short-term equilibrium price level and also, all right, the closing price on the yearly chart. The next financial instrument, which is the third one, is, Pufizia Incorporation. I hope my pronunciation is correct. The EPIC is Papa Foxtrot Eco, PFE, listed on the Dow 30. We're going to go again to the yearly chart. All right. By the way, this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. Okay. Very, very important. Do not use this video as a trading signal. All right. Use it as an educational video. Okay. Here we are on the yearly charts. The closing price of 2013 is the red horizontal line. Just above it, we have the orange line, which is the short-term equilibrium price level. We will give priority to sell signal below the red horizontal line, and a bullish signal above. As we are buying above the red horizontal line, if the price approaching the orange line, we must be careful and be prepared to take profit because other traders will try to sell it. The best place to look for opportunity to buy is above the orange lines. Alright? Also, if you pay attention carefully here, the red horizontal line is also the median line of this vertical move. You see the pink line from here to here. The red horizontal line is the 50% Fibonacci retracement level of this vertical move. There was a diagonal move, a vertical move. The price deep below the median line of the vertical move now is retesting it. That's where we are now. Some traders will look for opportunity to sell, but you want to sell. If you want to sell, you want to sell in a declining channel. All right. But priority to bullish signal above, okay, the orange line and below the moving average, below the closing, the closing price on the yearly chart, which is the red horizontal line, we give priority to bearish signal. I'm going now. So you see now from the year higher time frame, we are looking for a setup. We can apply the same strategy on the monthly chart, quarterly chart, closing price. Okay, price is now opening near a previous closing price on the yearly chart, on the weekly chart, on the monthly chart, on the quarterly chart. And also, by the way, I do not reveal to traders how to calculate the short-term equilibrium price level because it is my own proprietary trading tool. So the red horizontal line here, that's the closing price on the yearly chart, as you can see here. All right. So today, what has happened? The price gap down below the moving average 30, went down, but quickly went back above the moving average 30. So it did below the closing, the yearly, okay, the closing price on the yearly chart, which is the red horizontal line, you see today, the 2nd of January 2014, but quickly went back above it. So as the price was approaching, you see, the moving average 30, trader will expect that it will continue to move to the downside to find a resistance here, but it did not find a resistance here. So what we can do, draw your channel, okay? So you see this channel here, price, see D below, come here to the edge of this channel, if you allow, if you accept this, okay? So it was in a declining channel first, so okay, on the 31st of December 2013, the price closed here, and today it gaps down, you see, to retest the lower part of the declining channel. But as you come to the edge here, it didn't find a resistance. All right, it didn't find a resistance. There's a support here. So this level here, how you analyze this, there was a low followed by a lower low. If the price goes above the previous low, do not attempt to sell it again. Wait for it to go back below. So here you see, this was the previous low before the last low. If you miss this selling to the downside here, to the edge of the channel, this is where you will look for opportunity to sell, but you want it to go below this blue horizontal line. If you stay above that blue horizontal line, it's not the best place to sell because the price goes back above the previous low after displaying a lower low. You see here? So that's why it's stuck here like this. Now the price back again above, okay, the closing price on the yearly chart. All right, so it's now again in the bullish zone. Now, a lot of computers will say this is an inverted head and shoulder, the left-hand side shoulder, the head, and okay, the right-hand side shoulder. But sometimes, if you are just trading on a single time frame, for instance, because you're on a 3-minute chart, you see like this, and you do not check the higher time frame, you can okay, make a mistake because the market okay is fractal, and it's not just 3 minutes alone. All right, you need to check other time frame. So if it goes above the neckline, day traders will set their targets, expecting the price to go back to the level of $30.80 somewhere here, provided that it finds support above this neckline here. If it fails to find a support, well, the bearish momentum will continue. We can also project our channel, the first channel. We can project it as soon as the price goes above it. We project that channel. Now it goes above the second channel. We'll project equal size again, the second channel. That's why some traders are challenging here. So they are selling it again on the edge of the third channel. It's the first channel, it's the second channel, it's the third channel, okay, which is the projection of the first channel here. See, so they are looking for opportunity to sell. So if you want to buy it, you must buy above the neckline, provided that the price finds support. If you are an aggressive buyer, you decided to buy here because of the edge of TSTW24 trader will apply their rules, okay, so that they don't get into trouble. So here like this, if you want to buy above the moving average 30, you must hide your stop loss below this low at least. This is for aggressive day trader that want to enter the trade quickly. But you can see that the third projection, we are on the edge of it. It's not the best place to just start selling it like this, okay? All right, so from the yearly chart, we switch to the 3-minute chart, and we are analyzing what the price is doing around this resistance level. So we are looking for bearish patterns or bearish market patterns around the key resistance level. And we are looking for bullish market patterns around, okay, key support levels, okay? All right? You see now? So from the yearly chart, we can find a setup. We validate the setup and then use a multiple time frame trading method. This is about, okay, Profizia stock. We dip below the median line of the vertical move. Now it's retesting that median line. We find a resistance here, and it form a lower top compared to this top. Okay, trader will look for opportunity to sell. But if it goes above the short-term equilibrium price level and they find a support, we will be bullish instead. In that case, we will say that the price formed. Okay. Be careful. Okay, 1 second, please. We will say that the price formed a round bottom here. Okay, so it went round to so from here you see, it went round to this point. If it goes above that level and find a support, and the price goes into a rising channel on our signal time frame, all right, game on. This will be our greediest target for swing trading, position trading, or consistent day trading in the zone of $44.85. But if we find a resistance right here and continue the move to the downside, okay, we will use the Fibonacci extension levels. So we'll say it went down. You see, it went down from here to here. I'm concentrating on the body of the candle, not the tail. So we will say that this is the price now 50% Fibonacci retracement level. If it start going down, Fibonacci traders will say that the price has a high chance, provided that it breaks below this low here. If it doesn't break below this low, the price will not reach the Fibonacci extension zone. There is a support here. Do not forget that. This is a typical Fibonacci trading mistakes. There is a support here. Price pull rally up to the 50% level. If it fails to go above the 50% level, it's bearish because the 50% Fibonacci retracement level is a psychological price level. Priority to bullish signal above and priority to bearish signal below the 50% Fibonacci retracement level. So for swing traders who are using the TSCWSY008, we can put this stock on our watch list, on our bearish watch list, and watch it until we receive a clear-cut sell signal on the signal time frame and then take it from there. But because we are at a 50% retracement level, it's a psychological price level. A psychological price level is a thin, very thin dividing line between the bullish zone and the bearish zone. All right? So if you see now, so this is Profizia, okay, so, all right, you see now? That's what we are talking about, okay? So from the yearly chart, you see, 3-minute chart, projection of channel, we are on the edge, all right? So some trader would like to sell here, all right? It's not too bad place. Even if they lose, it's not a bad decision, but you can see that the price out of a bearish channel. So this bearish channel was here first, price goes above it, Now it goes above the second one. But if you are taking this trade on the edge here, it's a risky trade. Because why? Why is it risky trade? Though it's a low risk entry point to look for opportunity to sell, in this case, to control the risk, one must maybe take a risk of 10 pips, maximum 12 pips. Because if you lose that, you know that, okay, that's fine, okay? Because there was a lower low, followed by a higher low, okay? So the bearish momentum is diminishing, all right? We know that. But because it's on the edge like this, if you want to enter here, which is not a bad place, you must take a tiny risk and control it carefully. If it fails, just come out. But if it works, it can work out beautifully, and then it goes into the third declining channel, which is ping pong going ups and down in a declining channel and rolling it down. But the price now above the closing price on the yearly chart, okay, be careful, because we want to give priority to bullish signal above the closing price on the yearly chart. That's all you need to remember. So if you sell it like this, you want it to go below. That's a red line. Otherwise, they can kick you out of the trade. Okay, you see now? So do not forget the short-term equilibrium price level for PHYSIA. I'm going to go back again to the yearly chart. Okay. It's at, for PHYSIA, the short-term equilibrium price level is at $31.22. This level will remain in place for the next 2 weeks, $31.22. All right? Moving on very fast to the next financial instrument, which is the fourth one now. We got, okay, 3 more left to do now. The red horizontal line is the closing price on the yearly chart. We are now on the yearly chart of, okay, this Nike Incorporation. If you are involved in sports and you use, okay, Nike shoes for your sprinting and your sport, okay, this is a Nike Incorporation, EPIC NKE, okay, November Kilo Eco, all right? We are now on the yearly chart. The closing price on the yearly chart, 2013, is the red horizontal line, and the short-term equilibrium price level is the orange horizontal line. I'm going to go to the monthly chart to tell you exactly where is the short-term equilibrium price level, which will remain in place for Nike for 2 weeks. That level, the short-term equilibrium price level, is at $77. Okay, $77.85. Okay, am I right? That's it. $77.85. That's the orange horizontal line here. So in normal condition, priority to bullish signal above, because now you can see that the price above the short-term equilibrium price level, which means the price above is a short-term fair value, will give priority to bullish signal up to the closing price, which is the red horizontal line. You have to understand that in the previous analysis, the short-term equilibrium price level was above the closing price on the yearly chart. But for Nike, the short-term equilibrium price is below, okay, the closing price on the yearly chart. So if we buy it near the short-term equilibrium price level, which is a bit tricky because the price below the closing price on the yearly chart, some traders are selling it. But if it start going up again from the short-term equilibrium price level, the level we need to watch is the closing price on the yearly chart, which is at $78.81. So the red line is the closing price on the yearly chart, and the orange line is the short-term equilibrium price level, which will remain in place for 2 weeks. These are key levels that day trader can use, okay, to determine best day trading setups. The setup, the signals, and a low-risk entry point, without forgetting the trading triangle. All right? I'm going to go back now to the 3-minute chart. Everyone to see what the market has done today. Around this important price level, we are looking for the red horizontal line and the orange horizontal line. Maybe we will not see the red horizontal line, but on this 3-minute chart, I can't see any of them. I will go directly to the 15-minute chart, and we can see the orange line. You can see today. This is today here, 2nd of January 2014. As you can see, the price went down. In fact, it went up first, and then they sold it down. See here? So then it just start displaying lower high. You see, if you just draw a line like this, see? So quickly went up to retest this point. See the bearish trend line, and then they just sold it there and dumped it. It rallied back to retest the same bearish trend line, and again it found a resistance there. After this common set trend line is kaput, well, we will sell. You see, this is nice. We push it back again. It was a bit volatile here. We were trying to push it up, but it just this candle is after this candle here, you must sell and place your stop loss above it. That's it. Now it's going down. Okay, price going down. Okay, we are on a 50-minute chart. We want to know where are the support levels. Okay, I will go now to the hourly chart. This is about how to manage the trade. And we are now approaching what? The short-term equilibrium price level for Nike, which is at 77.85. See, the first time it came here, some people bought it near the short-term equilibrium price level. All right, so if you sold it today, you want to know where you are likely to take profit. And I will take profit here myself very fast. Okay? Looking on our left-hand side on the hourly chart, you see the price went around a little bit here. So this short-term equilibrium price level on the hourly chart is a kind of a support level, price break above it, retest it, went up, now it's coming back again near it. If you want to sell it, you want it to break below the short-term equilibrium price level and to come back and retest it and give you, okay, a sell signal. As always, what we are looking for, okay, a bearish channel if we want to sell. So we can combine the 3-minute chart, the hourly chart, and the 3-minute chart. So if it's in a declining channel, okay, on the hourly chart like this, okay, we want it to go, and then we test the top here, and then we look for opportunity to sell, and we want to sell in the declining channel. If it D below the short-term equilibrium price level, we want it to come back and retest it and to convert that support level into resistance, and then to give us a sell signal here, and we take it one step at a time. All right, so there are some levels here. Okay, that will be the second target level if this one becomes a resistance level, and the third target level will be here. 3 levels here. If it goes below the short-term equilibrium price level, next target near the 76.79. If it dip below the 76.79 and the final resistance, which will break below, retest, turn around, the next level is 75.72, step by step. If we go to the 4-hour chart, hopefully we'll see the closing price, which is the red horizontal line here on this 4-hour chart. That's the closing price on the yearly chart, and below that, that's the short-term equilibrium price level. That's where we are now. What has happened now is that you see the orange line, which is also the short-term equilibrium price level. It's a support level. See here the price break above the orange line, and I retest it here, and I find a support. It's a typical commodity channel signal. Price breaks above a key level and retest that key level, and they find a support and turn around. You see that the CCR will pull back near the central line or the 0 line, and then change direction again and continue to move to the upside. All right, so what's happening now? On this 4-hour chart, again, ladies and gentlemen, what do we do? All right, the channels, don't forget. You want to trade stochastic on the 4-hour chart, see here on the 4-hour chart, or anything you want to do on any time frame, look for the market patterns. So there was a top and there was a lower top, but now we are at a support level. If it did below the support level, the next target is here, so we will allow it. So now if you sold it today on a 3-minute chart, as I show you on a 50-minute chart, you see, and it's coming here, you take profit. Wait, or at least move your stop loss to break even if you want to remain in it until you get to the second target. For day trading, it's better to take profit consistently. That's my approach, okay? The next financial instrument that we're going to discuss, where are you, is General Electric. We're going to go now again on a yearly chart. What are we looking for? We are looking for a valid setup. So the red horizontal line, which I've already drawn on my chart, is the closing price on the yearly chart. We are now on the yearly chart for GE, Epic, Gulf, Eco, General Electric. All right, and the price did open today on the edge of the closing price of 2013. The orange line is the short-term equilibrium price level for General Electric. I'll go to the monthly chart and I'll tell you now. Hopefully I'll see it clearly there. That's it. The short-term equilibrium price level for General Electric is $27.16. Priority to bullish signal above the short-term equilibrium price level, and priority to bearish signal below. Priority to bearish signal below, and priority to bullish signal above the short-term equilibrium price level. Now you have to see again, as I'll show you for, okay, one stock earlier. Here the closing price on the yearly chart is above the short-term equilibrium price level. We will give priority to bullish signal on or near, very close to the short-term equilibrium price level. We will give priority to bullish signal. If you price find a support there, and as it's going up, we'll be prepared to take profit as the price approaching the closing price on the yearly chart at $28.15. So sometimes you may see that the price may, why this chart is this candle is moving there, this suffering. So we may see that the price may be consolidating between these two levels, because we have one key level at 28.15, another key level at 27.16. So now the best strategy is to look for opportunity to buy near the 27.16, and if we are buying, we are watching a level of 28.15 as our target level. As the price reaches the 28.15, we are looking for opportunity to sell again, because we are below the closing price on the yearly chart. But as it's coming near the short-term equilibrium price level, we are above, okay, all right, above the short-term equilibrium price level, and we'll look for opportunity to buy. Let's go to the 3-minute chart and see what has happened today. So you can see that the price start going down fast. So I want to see the red horizontal line on this 3-minute chart. I can't see it. Okay, I'll go to the 15-minute chart. Hopefully I'll see it. Here it is today. The 4th, the 2nd, not the 4th. Today is the 2nd of January 2014. All right. And today what has happened? Okay, on the 31st of December 2013, the price closed near, you see here, that's where it closed. Very close to this point, you see, close here. And now today, if it's going to be bullish, it must display a new higher high compared to last year. All right, so that's why it must go above the red horizontal line before we can be bullish. If it stay below this red line, we are bearish. But we are bearish up to the short-term equilibrium price level. So we will prefer it to go down more near this point. And if we receive a buy signal here, we will take it, and we will expect it to go back to this level. Probably we can have a nice consolidation here. But if they force it below, so which means we want to go step by step, all right? So if you're, we are a 50-minute chart. If you want to be very bearish, you want the price to go into a declining channel at least. Now, it's not in a declining channel. It just moved down from one key level going to the next key level. You see now? This is how you will day trade. Selecting a setup or a key level, a key support level, or a key resistance level, all right? Or using the short-term equilibrium price level, or the closing price, the opening price, the high, the low of a yearly chart, monthly chart, quarterly chart. And now switching to the lower time frame, looking for a bearish pattern or bearish signal around the key resistance level, and looking for bullish pattern or market pattern, bullish channels, and on or near, okay, key support levels. All right. You can see that I spend most of my time talking about the price instead of the indicators. We use indicator too, all right, but we want traders to focus more on the price and to understand what the price is communicating to us. This is about a General Electric, the short-term equilibrium price level that will remain in place for 2 weeks. It's at $27.16. All right. The last financial instrument that we're going to discuss today is DuPont Nemours. All right. The epic is delta D right here. I'm going to go again to the yearly chart. All right. And you can see the red horizontal line is in the zone of the closing price on this yearly chart. The price did open today near that closing price. And below that, this time, the short-term equilibrium price level, again, is below the closing price on the yearly chart. So, as I showed you already for, General Electric, there's a high chance that the price will go down to the short-term equilibrium price level and then find a support and return back to the closing price on the yearly chart until it goes above the closing price on the yearly chart or goes below the closing price or it goes below the short-term equilibrium price level, right here. The short-term equilibrium price level for DuPont Nemours is at $62.07. $62.07. Priority to bullish signal above and priority to bearish signal below. But because the closing price on the yearly chart and the short-term equilibrium price level are very close, the zone between these two levels, the price may consolidate between these two levels. So we are looking for opportunity to buy near the short-term equilibrium price level, and we are looking for opportunity to sell near the closing price on the yearly chart. But if the price goes above the closing price on the yearly chart and they find support, we will look for opportunity to buy. And if it did below the short-term equilibrium price level, all right, you understand, goes below it, the orange line, and then come back here and retest it here, and then fail to go above it, that's it. We'll look for opportunity to sell it. All right? As always, look for, bearish channel or whatever, for bearish trades, That's how you want to do it. Let me remove these lines, and then I will go to the 3-minute charts, Are you following me, all right? Set up the signal. That's how professional are day trading. They do not just go to the 50-minute chart, hourly chart, 5-minute, 3-minute, and start placing a trade. They work it down. That's what we call the top-down trading method. From the higher time frame, breaking it down to the lower time frame, to the low-risk entry point, paying attention to the price on each time frame. But you want to buy at the key support level. You want to sell at the key resistance level. Here we are at the resistance zone, which is the closing price on the yearly chart today. The price gap down. If the price gaps down and display what? A lower high, what do? You look for opportunity to sell. When the price gaps up and display the first higher low on your entry time frame, very important, on the entry time frame, you look for here, as soon as, because it gaps down, which is bearish, the bear sold it. Now, how do we know it's still bearish? If we display a lower high. So a lower high and the common center line here. After this candle here, which is also tricky because it's quite close to a support level. See, this one. But we will sell, and we just place our stop loss above it. It's a bit risky because there is a support here. But it works out, you see. Then you display another, a lower high here. And it's just holding it down nicely today. And as I said to you, now that it's going down like this, we are watching which level? The short-term equilibrium price level. Now I'm on the hourly charts. You see how you can day trade using a different time frame. I didn't stop on just one time frame and place the trend. All right, you see? Because we want to see the whole picture and know truly is going down or not. So on this hourly chart, again applying the market pattern, this is what we are saying to TSD W24 traders, at least use the channels on a higher time frame, hourly chart, 2-hour chart, 4-hour chart, and then go to the first best time frame and take it step by step, trade around key level. So if I did not know that there is a short-term equilibrium price level, I can use this level here, as my support on this hourly chart. So there is a support here. Support, I don't know that there is this is the short-term equilibrium price level. I know that this is a support level on the hourly chart, and I can draw another support level here on the hourly chart. And here there's another support which is exactly where the short-term equilibrium price level. The advantage of knowing the short-term equilibrium price level is that is the short-term fair value. It's great to know. So as the price rolling it down like this, all right, so we will prefer it in an orderly market to go in a declining channel if it's going to come down here. All right, so which means we want to see something like this. Instead of forcing a straight line, we will prefer an orderly market, something like this, okay? All right, going down gently, gently, gently through the channel, okay? All right, that will be what we will prefer, okay? Something like that. You see now? For Dupont de Nemours, the short-term equilibrium price level is at $62.07. And that level will remain in place for 2 weeks. You need to watch it and note it down. Do not forget it if you are trading the stock. And the closing price on the yearly chart, $64.91. The price confined between the closing price on the yearly chart and the short-term equilibrium price level. All right? If you are very, very bullish, okay, if you want to buy, don't force it. Wait until you reach the short-term equilibrium price level. And it come out of the bearish channel on the hourly chart. At least retest it before you take it up again in another rising channel. All right? This is the end of this video, or this series of video. Okay, the first video was about how to day trade, tips and tricks, part 1. And then we have part 2. This is the third part, which is closing this series of video about how to day trade, tips and tricks. I have discussed various day trading strategy, and I did not withhold anything. And traders have shared generously my experience with traders, the thing that they need to pay attention to, what they should avoid doing. If the market is open for day trading, wait the first 30 minutes, do not place any trade, follow the trading triangle, and use the market patterns. Trade around key levels. In this video, we were using the closing price on the yearly chart. We also use, in the second part of the video, this series of video, we were using also, okay, the Root Smart Median Line, all right? Especially for Cisco, we were using the Root Smart Median Line. We use also, all right, the key levels on the yearly chart, the closing price, the opening price, the high and low, and the median line. These are the key levels we want to watch. In this video, we were using the short-term equilibrium price level and okay, the closing price on the yearly chart, because the price did open today near the closing price on the yearly chart. The opening price, the closing price, the high and low on the weekly chart, on the monthly chart, on the quarterly chart, on the yearly chart. These are very important key levels that we can use for day trading purposes. I always say to traders, do not trade in the void. What I mean by that, always find a key level and trade around those key levels. As I demonstrated to you in these 3 videos, you have seen that we have used each time a key levels, and we were monitoring what is happening on a lower time frame, selecting a low risk entry point. We do not want to violate okay, the market principle. The market first, always have 2 watch lists, do your preparation, be both bullish and bearish, all right, all the time. Some traders do not know how to sell. Learn to sell and buy, and you will live a happy, day trader life. Until the next time, a happy new year to you all, and I will speak to you very soon. We are the TSTW 24 traders.